Now let's move to our next presentation by StoneX. Cross-border payments have been for a while problematic. Even SWIFT only launched its GPI solution last year. It simply illustrates how even such a network faces problems with payment across the borders. In Western countries, it seems to be less an issue than more exotic and faraway countries. However, with deduct, complex correspondent banking systems, risk of losing days before being credited, impossibility to track payments, and risk cross-border payment remain complicated. The complexity with some currencies and some countries come from the currencies first, the exchange and banking system, local regulation, and many other reasons. Even large global banks are not able to make payment in certain regions. It is why having a third party and a non-banking partner may be a solution for these complex currencies and countries. StoneX specializes in transferring funds to this developing world. Treasurers need competitive and transparent pricing, along with guarantees and secure delivery, whatever the currency or the countries. What makes StoneX specific in the fact that they have fully fledged domestic payment capabilities in these countries and can make payment for banks in areas where these banks cannot make them, for NGOs and for corporates. They offer a full service including hedging of those currencies and ensure that the counterparty will receive money on time and in full. For the payee side, they make the process seamless, transparent, with better exchange rate and secured. It is key because they are benefiting from the remitting local currency rather than, let's say, converting hard currencies. They leverage the strengths of partner relationship to guarantee timely and secure delivery of payment in the full amount. Today we will have an interview of StoneX specialist who explain problems treasurers are facing in some region with some currencies and how to sort them out efficiently. Now let's introduce Philippe Schindler. And the first question for you, Philippe. We know ATEL FE Stone, which made several presentations to ATEL's members in the past and published a couple of interviews. However, I've noticed that you have recently rebranded the company. What is your new name and why?
Thank you very much, Francois, for the introduction, and good afternoon, everyone. Yes, indeed. To answer your question, we decided to rebrand the company this year under the new name StoneX, which will greatly help the pronunciation and readability of our name around the world, as our customers are based in 130 different countries. Our earliest constituent company, ATEL Stone Wealth Management, was actually founded in 1901, and on the commodities side, Stone & Company dates back to 1924. So the company has quite a long and rich history in the markets. Our former name that you quoted, ATEL FC Stone, was the later result of the merger between International Assets and FC Stone in 2009. And all these years, we like to joke about the fact that this is a classic example of a name you end up with when you get married many times and no one wants to drop anything. So in 2020, we finally rebranded the company to StoneX, and we do believe this new name will position ourselves better towards the challenges of the future.
Could you introduce briefly StoneX?
Of course. So to give you a bit of an idea, so StoneX Group Incorporated is a US public company. We're listed on NASDAQ with total assets amounting to approximately $10 billion. We work with a very solid balance sheet, and we have about 40 offices on the 5 continents, serving roughly 30,000 commercial and institutional clients. There are 5 major different departments within StoneX, which are commodities, foreign exchange prime brokerage, securities, advisory services, and global payments. This enables us to trade and specialize in a large and diversified range of markets and products, amongst which, and the list is quite long, metals, energy, grains, dairy, renewable fuels, softs, livestock, interest rates, securities, and obviously currencies. And in order to facilitate their access to the markets, we support our customers throughout the entire life cycle of a trade, which is quite unique in our industry. From consulting and boots on the ground intelligence to best execution, post-trade clearing, custody, and settlement. And we support these services with consolidated key tools such as robust market intelligence sourced out of our global network of traders, analysts, and correspondents. Strong investment in technology with a unique blend of digital platforms and especially high touch and experienced client services in order to try to always focus on adding value to the customer's process.
Now let's move to Niels van Duinen from the Global Payment Division. So, deeper in the global payment, Niels, what are the main problems that you are proposing solution to?
Yeah, thank you, Francois, and Philippe, of course, for the overview of the group, and welcome to everyone on this webinar. So, in order to answer your question, I think it'd be good for everyone to understand our position in the market a bit better and really what our purpose of existence is. So, to provide you our perspective, we as Global Payments have been a specialist cross-border payment provider since 1986. And in that time, we've built up, well, let's say an impressive customer base that now includes many of the world's leading transaction banks who use our correspondent bank network and expertise in the developing world to complement their own coverage in the more developed markets. And with the globalization of trade, we're witnessing an explosive growth in the number of payments from the developing world to the emerging markets. And at the same time, governments, regulators, and commercial actors increasingly favor payments being executed in local currency and discourage the use of dollars to settle local obligations. So institutions like ourselves really exist to demystify the cross-border payment process. Developing and frontier markets shouldn't be really thought of as far-reaching. They are easy accessible. And that is really what our role in the payments ecosystem is, to facilitate access and efficiency. So to go back to your question, Francois, what are the main problems that we're proposing solutions to? Well, first of all, unlike many other providers in the cross-border space, we run our own network of local correspondent banks across the world. So instead of relying on one or two global banks, we actually transact in the local target market of the intended payment, engaging with local banks in order to secure a fixed, low cost, and maybe even more important, the clear guaranteed delivery times of payments. So we're able to offer upfront FX quotes with fixed cost in the form of an FX rate with an agreed spread for the transactions that you have to execute, guaranteeing that the payment will arrive in full with no fees or anything else deducted, and the delivery date of the funds, of course. And because we only interact with local banks, we're able to ensure highly competitive exchange rates. And all of this is supplied upfront in a transparent manner, putting the ordering customer in control of its costs and helping avoid problems of payments arriving to the beneficiary not in full. Obviously, requiring complicated reconciliations and maybe even having to send additional funds to settle the obligation. So that is really what we offer in a nutshell.
Given the member base of ATEL being mostly corporates, can you tell me how this would work for those type of organization in more detail?
Yeah, of course, a valid question. And let me give an example, a case study, if you like. So we work with this leading global insurance group that needs to make multiple local currency payments all over the world. So the company I'm referring to makes over 3,000 cross-border payments in 52 different currency pairs on a monthly basis to locations all over the world where they don't hold a local currency account themselves. So they are able to upload these payments in one file directly into our pricing and payment system called FXecute. The system auto prices the FX deals but also validates the instructions and notifies the ordering customer once the transaction settles. So with access to this technology, coupled with an extensive network of over 300 local correspondent banks across the world, companies are now able to engage in cross-border business to pretty much anywhere in the world, making local currency payments almost as simple as domestic payments in their own markets, and of course, for a guaranteed cost. And there's one more thing I would like to add here. With the significant investment over the last 5 years in technology on our side, we are now in a position to offer a highly simplified process to companies, offering auto pricing of FX transactions, the validation of payment instructions, and straight-through processing in over 140 different currencies. But of course, we can also offer pricing through more traditional channels like Reuters, Bloomberg, 360T, and FXall. So I hope that answers your question, Francois.
No, David will see. We have two Davids at StoneX. Given the global nature of your payment business, could you give us an overview of how payment flows have been impacted during the COVID-19 pandemic?
Thank you, Francois, and hello, everyone. Well, I really think there is a twofold answer to that question, basically two ways to look at it. Firstly, has global payment infrastructure held up? And secondly, how have payment volumes and corridors been impacted? And it's two very distinct things. So on the first part, quite remarkably on a global basis, as seen by this slide, despite lockdowns in nearly every country globally, the global settlement system has remained remarkably robust. From Asia Pacific through Africa, all the way to Latin America, the impact on payment settlements has been incredibly minimal. Reduced working hours, remote working, banks and clearing systems from Taiwan to Kenya has suffered little to no impact. At the same time, access to FX liquidity has remained constant, and that is irrespective of whether we are talking about the British pound, Japanese yen, or a more exotic currency like the Ugandan shilling. So for this part of the question, there's no real need to dwell because the impact has been remarkably small. However, inevitably, when it comes to payment flows corridors, there is a much more distinct picture that can be found. As you can imagine, and we all know this, some industries and businesses have inevitably fared much better than others. For us at StoneX, due to the nature of payment flows we facilitate for a variety of different sectors and industries, whether that be large technology firms, car manufacturers, charities, insurance companies, we are fortunate to have at least some grasp of the COVID-19 impact, particularly as we help facilitate these flows into currencies all around the world, from South Africa, Malaysia, all the way to Brazil. And so today, I'm just going to give one or two examples of what we have seen. And in my opinion, the stock market is a really good gauge for the impact on cross-border payment volumes. And there are particular sectors of stocks which have actually really benefited from the restrictions imposed by COVID-19. The financial markets like to call these stay-at-home stocks. These are stocks that have really benefited from us sitting on our couches or working in our home offices. And so the biggest example, the prime example, is big tech. Big tech has been the largest benefactor of the virus when it comes to revenues. And here at StoneX, we have certainly seen flows increase in this sector as well. So I'm talking your media content platforms, which we have used to binge on numerous TV series throughout the 1 or 2 lockdowns we've been through. They are sending larger flows into places like Brazil, Colombia, Iceland, even Malaysia, as demand for the product grows in regions all around the world, and they need to see more content to that platform. Your favorite technology suppliers are having to import more raw materials from places like Taiwan and Korea to meet consumer demand. And then there are the online-only shopping websites, the logistic cloud hosting companies that are having to pay more money to offshore suppliers in countries all around the world. As demand increases for this type of user experience, as consumer habits change because of this wicked virus. So for the first part of the question, payment sizes seen in 2020 on a cross-border basis are certainly dwarfing those seen in 2019 for many industries. But of course, that does not tell you the whole picture. There are many industries that have been negatively impacted. And there's some which look resilient now. I'm thinking, you know, like the charitable NGO payments, which could face becoming suppressed in the years ahead as government budgets reduce. There are, of course, many industries impacted: hospitality, travel, but we won't go into so much detail on those today. I'll just mention a couple of examples from what we've seen here at StoneX. So generally, we have noticed a definite downtick in payments into emerging markets for at least certain types of payments. So I am talking capital injections, share purchases, acquisitions, loans. And this is mainly down to the market volatility seen in these emerging markets since the COVID-19 pandemic broke out in March this year. Investors have certainly taken a step back. In most cases, they're sticking to their core business rather than seeking to expand. So countries such as Vietnam, Brazil, India, all fast-growing emerging markets that we have facilitated large flows in recent years, payments into these markets for the reasons which I've already mentioned, whether they be made in dollars or local currency, they have certainly reduced. And it's a similar story for the energy sector, which was so badly impacted by falling energy prices at the start of this outbreak. You know, when oil prices went negative, when the world almost ran out of storage space for oil due to the immense oversupply. The inflows that we at StoneX facilitated into new and energy existing projects in areas such as Africa back in 2019, these have certainly reduced this year. Companies reduce cash flow, they're not willing to take excessive risk. And of course, payment flows, cross-border payment flows, reduce because of this. So just in a nutshell, based on a few examples, this is some of the things we have seen here at StoneX when it comes to cross-border flows.
This year, it's fair to say that the world has faced several challenges. Could you give us your view on what factors are likely to impact major currencies such as euro and the pound over the next 6 to 12 months?
Yes, of course, Francois. Of course, this is what I find the most interesting part always as a trader day by day. Well, firstly, the last few weeks have been dominated by two main news stories in FX, which everyone will be aware of. Well, there's three, but I'm going to discount Brexit just for the moment. These are Joe Biden winning the US presidential election and the expected fiscal stimulus that comes with that. And of course, the regular, incredible, successful trial results from a number of COVID-19 vaccine candidates. And as we can see from the slide on show, both these news stories have served to boost global risk appetite, causing global equities to rally and for the US dollar to be generally crushed against a whole host of currencies. And why is that? Well, some will remember that at the outset of the COVID-19 pandemic, we saw immense strength of the dollar in what was the flight to safety trade. The dollar was the world's safe haven. We saw that immense market volatility. And most of the time, it was significant gains for the dollar against nearly every currency. Well, now we're seeing this trade unwind, albeit not so drastically, in a much more gradual sense, I would say. Secondly, with Joe Biden now president-elect, most investors expect continued fiscal stimulus, and importantly, much larger than what we would have seen under another Trump administration. Investors are really expecting the US to spend big out of this pandemic, and ultimately, this will promote a weaker US dollar. And finally, the third important point I have here is most investors expect long-term low interest rates in the US and very easy financial conditions. This will ultimately be very positive for global growth outside of the US, as low interest rates in the US will promote easier access to credit, as most borrowing takes place in US dollars, particularly for emerging market countries. As investors start to seek out yield and returns on their investment, which may not be available on US debt, this could lead to a bumper period for high yield, riskier debt, emerging market currencies, and value stocks, those ones who suffered so badly during the worst of the pandemic. So on this basis, on the factors I've mentioned, continued dollar weakness seems to be expected, and it seems likely against both G10 and emerging market currencies. But what are the risks to this view? Well, a successful rollout of a COVID-19 vaccine, a really successful one, quicker than expected recovery for global growth, and particularly the growth of the US economy, a quicker return to the norm, if you like, will likely lead to speculation over reduced stimulus from government and a tightening up of monetary conditions by the global central banks, particularly the US Federal Reserve. those assets that are supported right now, the ones I just mentioned, the emerging market currencies, equities, high yield debt, they could start to face a slightly more bumpier ride if investors start to become unnerved. And on the other side, well, currently most market news is risk positive, thereby negative for the US dollar. A successful Trump election process, however unlikely that is, or an unsuccessful rollout of a COVID-19 vaccine, including further drawn out lockdowns, this could see a return to the fear trade, a flight to safety trade, where dollar becomes king once again, the currency of choice for investors. This could see swift and sharp dollar strength return. And ultimately, these are the events which I deem to be the main factors influencing performance of major currencies in the next, 6 to 12 months. But there is another factor, which I briefly mentioned earlier. When it comes to euro versus sterling or sterling versus dollars, the continuing issues of Brexit are still playing a large factor, sadly for me. The never-ending story of Brexit still changes day by day, driven by headlines. But the truth is, in my opinion at very least, even if when a deal is agreed, the constant Brexit narrative will likely carry on in the months and years ahead for all of our board, I'm sure. The amount of detail that needs to be worked out around any deal that is eventually agreed in the next week or already agreed, there is so much of it. And in my opinion, most investors, sterling traders, will move on in the months ahead. Brexit news will start to lose its influence on sterling trading. The significance of what happens next is becoming already less and less important. And I think the factors that I've already mentioned, the more global macro factors, will come much more into focus. I mean, of course, this is none of the things that are ever easy to predict, especially given the world that we live in today and the shocks, the seismic changes that we're experiencing. But this is how I see it at the moment, Francois.
And now David Unsdorfer, the other David of StoneX Technology Solution. Could you talk a little about why StoneX decided to develop technology offering?
Sure. Thank you, Francois, and thank you everyone for having us. So we've heard today about our global payments division, and this is a business that sends many payments into 170 plus countries, 140 plus currencies. And on a daily basis, this business receives massive numbers of payments instructions, status queries, confirmation requests, and so on. And these are done in very, very large numbers from a very large range of underlying customers. At the same time, we, StoneX, need to turn these instructions around to our correspondents for onward processing in equally large volumes and to hundreds of different counterparties. And fundamentally, this business relies not just on a strong network of correspondents and partners, but also on robust and scalable technology and automated operational processes. And it's only because we have these two things in place that we're able to run our business in a very high level of quality that our customers expect of us. Now, it's all very well and good that StoneX enjoys great technology and great automation capabilities, but many of our customers face similar challenges. Many of them operate globally. They also have diverse networks of correspondents and financial counterparties with whom they need to communicate in large volumes every day. They also have a range of applications and back office systems that they need to manage and try to streamline. They are also having to deal with ever-increasing volumes and meeting real-time demands and others. And many of them could also benefit from new technologies to help them run these businesses more efficiently and cost-effectively. So considering the relationships that we've built with our customers in the past 20, 30 years, StoneX decided to develop a dedicated unit that is focused solely on helping our customers meet these challenges. And we do so by offering a range of business-driven financial technology that's geared at helping our customers adapt better to ever-increasing levels of change, to operate more efficiently, and to enjoy a higher level of service.
What are the main challenges that you are helping your customer solve today?
Sure. So we provide a range of services to different kinds of customers. But certainly on the corporate side, we're seeing quite a few common challenges that we're helping our customers solve. So firstly, we help our customers streamline the way that they communicate with all of their financial counterparties. And if I just briefly return to our global payments example, this global payments division needs to communicate with hundreds of correspondents and customers on a regular basis, and we do so using the medium of SWIFT. StoneX Technology Services is itself a registered SWIFT service bureau. So we can help our customers with all things related to SWIFT. We can help them to singularly and seamlessly connect to all of their financial counterparties. And this can be done using SWIFT or non-SWIFT connections as well. But fundamentally, what we offer is our customers the ability to connect to us once, and then we take care of the rest. And this means they can throw away all of their security dongles. They only need to manage one username and password, and it really simplifies the process. Secondly, many of our customers don't have as real-time view on their cash positions as perhaps they would like. And it's really important for customers to have a view on their cash positions for the smooth running of the business, particularly for treasury management and liquidity purposes. So we help our customers to obtain a reasonable view on their cash positions, no matter how many counterparties they have. We do so by helping them to receive end of day or intraday statements from their banks. We feed this data into a dashboard and tables that clearly show them what their positions are. And for those that use treasury management systems or ERP systems, we're able to help integrate these files into those applications as well. And thirdly, and finally, one of the main areas where we're helping is we're helping our customers to normalize their payment processing models. And we do this using our messaging hub solution, which is comprised of smart, powerful technology, standardized operational processes, and automation software. So just to give an example, many of our customers, like I said, have the challenge of sending and receiving hundreds or thousands of financial communications on a regular basis. These communications are being generated by all sorts of different systems and need to be routed to various different counterparties. These counterparties may require data in specific ways to conform with local regulations and requirements. This can quickly become quite a complex process, but it's a process that our messaging hub helps to normalize and solve in a way that doesn't require our customers to make wholesale and often slow and expensive changes to their core applications. So in a nutshell, those are the three areas that we're really trying to help our customers.
Thanks a lot to the four of you. It was extremely interesting, and I do suggest, given the number of questions in some currencies and in some countries, to organize early 2021 a workshop dedicated to answer your question in specific currencies and how to proceed with them. Thanks a lot for your attention.